Hello, traders. Gary Wagner with WFG4X.com. It is about 11 o'clock here in Honolulu, Hawaii, 11 a.m. The date today is the 8th day of April. It is Thursday, and let's get right to the board. Gold is continuing to trade higher today. We are currently at 1150.80. For those of you who are taking our calls, we did enter a long position, of course, and that position was initiated on the 25th of March, roughly at 1097. In other words, we got long originally based off of this candlestick pattern as the market came down. We had an on-neck pattern. We also found support on this pattern and entered our trade right in this area at 1097. We originally had our stops below these candles. We continued to trail them up, and currently we do have stops at 1132. 1132 on a protective stop. We also initiated a scale or an additional add to our positions yesterday, and traders who took that call got in at 1145. So it's going to be somewhere right around here. Now, the candle that we're looking at right now is still trading, of course, and it is what we call a small spinning top. That spinning top right now is in a star position. So we all realize that at some point this market will begin to retrace. And when it does, we certainly want to take a look at pulling profits on our position. Now, where are we looking at in terms of targets? We've been talking about these areas for quite some time. And this is at 160. And we're currently, as I said, at 150. We do have a resistance point right in here. So we do want to take a look to see how, in fact, it reacts to this one area and then make our recommendations accordingly. So in terms of resistance, in terms of what I'll call the big picture, we're going to look at this one top, which is that 1160 point. And you notice I've put our Fibonacci numbers up. I think the next point we're going to want to look at is if you see where this one particular top comes in right here. As the market sold, we had that one high there. The interesting thing is that that also corresponds right to a Fibonacci retracement sequence, and that is our 23%. And that is at 1170. Let me put that right in here, 1170. So what I'm going to look to see is as the market does trade higher, there is going to be a point when it stalls. And unless we get a move like we saw here. But what I am liking is we have predominantly up days. Since we've entered the trade at 1097 right in here, and this is what I really like about candlesticks. Of course, the red candles are days with higher closes. You have 1, 2, 3, 4, 5, 6, 7, 8, 9 trading days, and only 2 trading days where it closed lower. As long as we're maintaining that kind of a balance, which is the same thing that you saw here where the predominant market moves, even though you had some pretty erratic moves in here, were higher closes. As long as we continue along that course, I'm going to look to trail stops up and add positions. As I said at the beginning, if we do happen to catch a trend, I want to position our traders so we're lucky enough to stay on this ride. And so far it's been a real good ride. We've got $53 on the trade on a 100-ounce contract. It's easy to do the math. It's about $5,300 per contract. So I'm very, very comfortable and very, very content and happy with the position that we have. I think that when we look at the big picture now that we can be an armchair quarterback and see where we got in, we didn't get in at the bottom, but we certainly got in and positioned ourselves very, very close. That's the power of candlesticks. This has been Gary Wagner with your daily market forecast for Forex Gold. And traders, as always, good trading. Bye-bye.